Today we have OTC medicine for crypto fever. It's our 76th newsletter. And again, we're here to bring you guys talks about everything going on in the market for Bitcoin, cryptocurrencies, and blockchain every single day. So again, let's just jump right into it. Again, as a disclaimer, this isn't financial advice. This is for educational purposes only. We're only talking about general stuff going on in the news. We're not giving you any trading suggestions, trading advice, telling you what to buy or sell. We're just talking about stuff that's happening in the market, and I'm sharing my 2 cents about that, what I kind of think is going on, and what I've seen just in the news. So again, this isn't anything you should be trading off of. If you want to trade off of something, then seek a financial advisor. Make your own decisions. Don't look at me, because we're not really getting anything out of that right here. Again, quickly, if you guys want to subscribe to the newsletter, take a look at our website. You can sign up there, plug your email address, and you'll be added to the mailing list Monday through Friday. For our table of contents, we'll start out with the tweet of the day, and that ties into our word on the street, which we're going to look at the over-the-counter markets here and the recent surge in demand, apparently, that we've seen with that. For Where's Blockchain, we're going to be looking at a medical application of blockchain technologies and what a couple companies and medical institutions are doing with blockchain, and a recent pilot. For bulls and bears, for the bull side, we're looking at the Asian markets and I guess interaction and engagement in there, and why that's going to be necessary in the rest of the world and other markets in order to make sure that there is going to be the potential for a increased surge in investment similar to what we saw in December. And for the bear side, we have the Centra Tech ICO that Floyd Mayweather promoted back in August, September. They kind of hit the gutter and clunked out, and we're going to see what happened there. And for education, we're wrapping up with the Sharpe Ratio, and we're going to take a look at Chris Bernisk and Adam White's write-up that they did with ARK Invest and CoinDesk and GDAX, bringing in a new asset class, and basically why crypto assets and cryptocurrencies should be considered their own distinct asset class. So, moving on, tweet of the day. We have Jeremy Gardner, aka Disruptor. Jeremy is being he stands accused now of starting a mini bull market because of the recent uptick in Bitcoin prices and the market in general after setting this out. But he said again, there's been a market demand for Bitcoin in OTC markets. It's unlike anything he's ever witnessed. There's been several asks accordingly for multi-billion-dollar blocks. And again, we're going to get into this more. But again, this ties into the main story here. And Jeremy is 25. He's a Michigan grad. Well, actually, he dropped out of Michigan to go into crypto full-time. He found out about crypto in the fall of 2013, I believe, and became super interested. So again, he's just one of these guys that is in his mid-20s that's playing a pretty serious role in the market right now and became pretty immersed in it. And he's even though he's pretty young, Jeremy is going to, he gets a lot of weight because he's been around for a lot longer than most people have. So, when he says stuff like this, people listen, and clearly he's being attributed to some of the recent price movements. Obviously, there's a lot more going on, but people like to point and kind of put a pin on certain news events and certain fundamental stuff that's going on behind the scenes for reasons why the market is behaving the way it does. So, again, take it or leave it. As for word on the street, so again, there's this over-the-top demand for the over-the-counter markets, and again, it all comes down to liquidity. And liquidity, by Investopedia's definition, is the degree to which an asset or security can be quickly bought or sold in the market without affecting the asset's price. So again, if you have a very illiquid book and you're trying to purchase an asset that is very illiquid, there's going to be a difference between the bid price, which is what buyers want to buy, the price that buyers want to purchase the asset at, and the ask price, which is what sellers want to sell their shares or their fractional ownership of that token or asset, whatever it might be, is. So the more liquid the books are, the more liquid the market is, the tighter the spread is between the tighter the spread is going to be between the bid and the ask. So there's going to be less of a change in the price, and less of a difference between that bid and the ask price. So at the end of the day, more people are going to be happy. And again, if you look at the cryptocurrency markets right now, Bitcoin has a large percentage of that daily trading volume because Bitcoin is the most liquid asset. Bitcoin is the most liquid cryptocurrency in the market. Tether is up there too, but I really don't consider Tether to be a cryptocurrency. Most people don't really. It's considered a stable coin more than anything, and a fraudy one at that, or at least a shady one at that. And then Ethereum comes in third with about 9.5% of the total daily trade volume. But there's a reason that Bitcoin has such a high percentage, almost 40% of the daily trade volume, and that's because Bitcoin is king. That's a general expression that most people in the market, most traders, at least on crypto, on GitHub, on Bitcoin Talk forums, that's an expression you'll see often. And the reason is most altcoins are still paired to Bitcoin. If you look at most trading exchanges, Bitcoin is really what you need to buy Bitcoin first in order to purchase some of these other alternate currencies. That's the only way you're able to even get in some of these markets. So again, you're seeing that there are other pairings. For example, Ethereum. There's some Ethereum pairings. There's Litecoin pairings in some occasion, in some instances, but again, they're few and far between. For the most part, there are Litecoin markets for U.S. dollars or other fiat pairings, but other than that, there aren't many examples, to my understanding, of altcoin markets for Litecoin. And again, there were altcoin markets for Bitcoin Cash, but we can see that KuCoin delisted trading pairs. Not because they wouldn't really work, but there wasn't a demand for that. So again, you have to think about the cost and the toll that it takes on KuCoin in order to list pairs. And if there isn't much liquidity offered or liquidity in that market to trade Bitcoin Cash for these other cryptocurrencies and altcoins, then there's not really much of a need. For the most part, Bitcoin dominates that, and it's reflected in the liquidity. And then from there, I looked at this as, well, and everybody should be looking at this as, where can you trade these cryptocurrencies and what options are there to trade right now? So we have, in terms of the most futuristic concept, there's decentralized exchanges, which I personally think we're very, very far off from, well, maybe not very far off, but we're still far off from making some noise in this market. And by that, I mean there's really still a ways to go until these markets get very liquid. You can ask any expert in the field, they're going to generally give the same sentiment, I'd say, that there's poor liquidity, and that's because, number one, the user interfaces are still very, very foreign. They're not native yet, like Binance or other digital asset exchanges that are much more familiarized. So again, it's kind of like you're trying to work an alien spaceship and fly an alien spaceship. You're not going to understand how to use it, so people are going to stick with what they know, which is Coinbase, which is Gemini, which also just cranked up their fees. I believe Gemini quadrupled their trading fees. So they might have just shot themselves in the foot. I'm not really sure what's going on with that and why they made that decision. But that's just an aside, what's going on with Gemini. But again, the fact that these interfaces are too foreign, and also we're super early. So there's a lot of decentralized exchanges that they're probably a little buggy, they're probably laggy. There's definitely a lot of stuff that has to go in on the development side. So again, until that really happens, they're going to remain pretty illiquid. So with that, most people are going to be sticking to centralized exchanges, which again, for the most part, that's where I do my trading if and when I do ever trade. And again, that's the same thing for most people. Retail investors are doing trading there. Institutional investors are doing trading there. It's all of these, and this is where you're looking at all these applications. Square, again, Circle, Abra, Revolut, all these applications, alongside Binance, alongside Bittrex, alongside Poloniex. This is where most of the trading is going on. But at the same time, those order books are only so thick. So if a massive whale comes into the market with, let's say, I don't know, millions and millions of dollars and wants to take a casual buy order, he or she is going to rip through the order book, and that'll push the markets. And there's a lot of risk of moving the markets and having some slippage there, where the price that they wanted to purchase at isn't going to be the price that order is executed at, because the average price is so large. So when that happens, people have to look at another means to purchase, and that's where OTC exchanges, over-the-counter markets, are becoming super popular. And this goes back to Jeremy Gardner's tweet. And again, Reuters reported on this. Apparently, there are some brokers with OTC markets that are reporting $100 million, in excess of $100 million of daily trade volume. They're getting minimum orders of $75K, $250K. That's most people's purses and that's even way higher than most people's purses in the market right now. So again, they're doing just one-time buy orders to this degree. You can tell that there's really going to it really would cause some people to take notice if this were taking place over centralized exchanges. So again, the fact that you can't use centralized exchanges, how do you get in touch and how do you connect these two parties? People are doing that. People are apparently facilitating these transactions using Skype as an intermediary. And the reason for that, again, centralized exchanges are kind of reined in by the country that they're in. So for U.S.-based exchanges, U.S.-based centralized exchanges, you have to comply with the regulation and the governmental, again, just laws and rulings that are taking place in the United States. For international exchanges, it's a little different. That's why Binance is kind of going over to Malta. They're still flirting with the U.S. government, not really abiding by their laws, so Malta gives them a little more leeway. But again, with Skype, it's really just a communication line, so you can converse over the phone with your broker, and the trader or the person who wants to execute the order can speak with them. And again, it's relatively free. I think there are some fees. I don't use Skype much for the most part, but again, it's minimal fees compared to what you would have to do on centralized exchanges, or it's just less complicated to connect these parties. And again, there's advantages to over-the-counter, there's risks to over-the-counter, there's big players in over-the-counter. There's more players in Genesis Circle and Cumberland. And again, there's more details about each of these players if you want to take a look. I believe I read another article on Reuters that was a little more in-depth that said that Cumberland traded about 20 to 25 cryptocurrencies over the counter. So again, there's a lot of options here that you don't really have to resort to going to a centralized exchange. And again, if you're using OTC, there's reduced chance of slippage. There's a decreased risk of moving the markets. You can still move the markets with these block orders like Jeremy was mentioning, these really, really massive orders. John McAfee just tweeted out earlier about how he's one of the first people kind of making I guess a push to execute some of these block orders in the market. So again, it's happening, but it's not going to cause as much of a ruckus as it would on these centralized exchanges that have limited order books. You just get matched up. It's like, I guess, I don't know, eHarmony, where if somebody wants to sell $40 million of Bitcoin and you have $40 million to buy, then it's settled right there and nobody really else has to deal with it. However, there's risk, there's price discovery. You kind of have to figure out where people are willing to kind of find that happy medium between the bid and the ask. There's a higher settlement risk. And on top of that, you have to trust the people on the other side of the line to make sure you're not dealing with, I don't know, some mafia boss or somebody that's trying to launder money, a criminal gang, whatever it might be. You have to make sure that you're not helping facilitate the laundering of funds, because if you are, there's a good chance that you are going to go down with the people that sent or received those goods from you. So again, or sent you those laundered goods. So again, you have to make sure that the guys that you're working with are clean, and there's no risk of you having to pay a price for something that you really don't want to, or going down a road that you don't want to go down in the end of the day. So again, that's that. Going on towards blockchain, we are curing medical blockchain, nudge nudge, we're curing medical blockage with blockchain. There are 5 healthcare organizations, one of them being United Health Group. I believe they have about 200 million or billion, I believe, in revenue. But again, they're a larger player in the healthcare industry. But these 5 organizations, Humana, United Health Group, Quest Diagnostics, Multiplan, and Optum, they partnered together. They're launching a blockchain pilot, and they're aiming to basically create a distributed ledger of provider data to make sure that they can reduce any costs that it takes to make sure that all their data is accurate across each ledger, and the time it takes to kind of go through each system and say, all right, look, like there was an update made to this ledger and it's not reflected in this ledger, so now we have to go through and adjust each of our records to make sure that everything is correct. If you have 3 different pools of information and they're all jumbled up, when you're trying to confirm what information is accurate, it's a pain in the butt. So again, here they're going to see what efficiencies they can have by making sure that there is a distributed database of provider data across all organizations. This is generally what we're seeing with all healthcare. there's a huge issue here in the market, and I mean anybody that's in healthcare, we've been talking about this a couple times. It's just the idea of one database versus many databases. So again, and then on top of that, it would be secured cryptographically on the blockchain, and there would be a quicker means of distribution. There would be a quicker means of confirmation. It would be cheaper. Yada yada yada. There's a lot of benefits to blockchain. So again, I really expect that there's going to be more partnerships and pilots similar to this in the future. And again, there's a huge reason for it. There's a lot of costs to be saved here. About 2.1 billion is spent annually, according to government data, and over 50% of data is inaccurate. So again, it could be, yeah, there's just a lot of data that is kind of faulty. So making sure that it's accurate from the get-go helps everybody at the end of the day. So everyone's happy. What else should you read today? We're going to look at 3 of these in a little more detail, but again, I definitely encourage you guys to take a look. Click on any of these links. West Virginia is testing a blockchain-based voting system for their May 8th primary. So again, we saw this with Sierra Leone. There was actually a report that followed up about Sierra Leone that claimed that they did not use a blockchain-based voting system for their elections, so I guess that was some fake news. But again, this is another huge implication or application for blockchain technology, voting, to make sure that those can't be tampered with and there isn't any, again, just no tampering with voting data. Crypto Rand, he is a cryptocurrency investor and influencer in the market. He recently updated his security with Google's Advanced Protection Program. We're going to take a look at that, just briefly introduce that to you guys later on. The total capacity of the Lightning Network, that's been going up in recent times. It just crossed over 10.5 BTC. It's actually hovering just under that right now, but I'm going to show you guys a website that tracks that and, just show you guys kind of an overview of that. Russia released a regulatory framework for their ICOs, and this is something that's going to be issued with rubles. So again, you can't use any other fiat currency or cryptocurrency to launch your ICO. You have to use rubles, or you have to use rubles to pay for it. So that allows Russia to keep a tab on who's purchasing everything, and also just maintain a circulation and basically entire control over that. If it's only their currency going into the system, then there's going to be a demand for Russian rubles. So again, there's a need for that currency. Again, the government of Antigua and Barbuda, they're launching their first cryptocurrency exchange. The government's been talking about it. They think it's going to be good for the economy. So again, they're in talks for that. We can follow up on this once this kind of goes and takes shape a little more. Bitcoin developer and entrepreneur Jimmy Solm, he wrote an article on Medium. He's a very, very intelligent guy. Jimmy does a great job of explaining stuff very succinctly, very clearly, and he wrote a take on why Bitcoin is different. This is an awesome read. It's already gotten a lot of attention on Medium. So again, that just goes to show Crypto Rand as well. I think they're both excellent. But again, just taking a look at both of their stuff on Medium, definitely recommend it. A South Korean tax plan is coming in for 2019, the 2019 tax year, and that's going to kind of be rolled out in June 2018. We're going to get an idea of what the Finance Ministry, the Ministry of Strategy and Finance for South Korea, is thinking for taxes. And JP Morgan's head of blockchain development, or product development for Quorum, her name is Amber. She left the company to start her own venture. And again, I'm blanking on Amber's last name, so apologies, Amber. But again, Amber was a huge figure at JP Morgan, the head of blockchain development for Quorum. So again, it's very interesting. We're seeing this trend of these executives at these banks that have a specialty in blockchain. They're leaving, starting their own thing, focusing full-time on blockchain and digital assets and kind of pushing that industry forward. So another really interesting development going on there. Again, so Google's Advanced Protection Program, this is something that not many people really get the opportunity or pleasure. It's more so, I'd call it, I mean, it's all about perspective. You could say, oh, this is great, but really it comes down to the fact that you're an interested party, and there's usually a government-backed attack, apparently, that is being placed on your email address, your information. So that's where Google identifies that this is going on. There's, I believe, less than 1% of all Google accounts, or all accounts, that are impacted by this. So this is usually if you're, I guess, if you're an outspoken figure in a particular industry, if you're you're a reporter, if you're a journalist, whatever it might be. So hopefully that doesn't happen to any of us in the future, because we have nothing to hide. But again, Crypto Rand, this happened to him. He has a huge following on Instagram, so he just kind of shared his experience on Medium and what he did to kind of set this up. So again, I thought it was super interesting, and a lot of people didn't know about this. So again, just kind of cool to take a look at and see what's going on here. For the Lightning Network, again, so this is a website that was set up. I don't have the name of the website here, unfortunately. I thought that was in the screenshot. But again, follow this link to get to that. If you guys want to get these slides, just send us a message, send us an email at hello@thedailybit.news. Reach out to us on our social media. I'll try to link this in the show notes. And again, there's a green line here and there's a yellow line here. The green shows the capacity of the network at the time. So right now we're at about 10.4 BTC, and that's the primary axis on the left-hand side. And the yellow line over here is the number of open channels on the Bitcoin network. So again, we have just over 4,500, approaching 4,600 channels. So again, I should have actually had the x-axis too, just so you guys see what time frame we're looking at here. But a lot of this, again, you can check the website for yourself, but a lot of this growth has happened in March, I want to say. So, I mean, we've been talking about the Lightning Network, what's been going on with the scaling. There's been, I want to say, even reporting back maybe 2 months ago, there were only maybe 500 channels in the Lightning Network. So there's been a lot of growth recently. And again, it's going to take a while to scale. It's going to take a while to deal with the bugs. I am not technically learned by any means in the Lightning Network, so I can only talk so much about it. And I know that there's a lot of kind of arguments against the Lightning Network. There's a lot of arguments for the Lightning Network. I understand the arguments for the Lightning Network. It would be a second layer scaling solution that you would put on top, that would basically be tacked on top of Bitcoin and allow for more transactions to go through per block, because transactions would be settled off-chain, meaning they wouldn't really take place on Bitcoin's blockchain. And explain it to me like I'm five, I guess the bulk of the transactions, again, they happen off-chain, and there's really just one small piece of information that has to be listed on Bitcoin's blockchain that will account for all the transactions that take place on the Lightning Network. So again, it's supposed to allow for thousands of transactions a second, basically. So again, instantaneous, basically zero fees. But again, there's some qualms that have popped up about the Lightning Network and some issues, some bugs. I don't know much about that, so I can't talk about that. Again, if you want to look at that, there's a lot of resources online, and I'm going to try to talk about this more once I understand and don't sound like a big dummy when I explain it to you guys. So again, that's really just a quick introduction, and this is a really interesting site. So I guess get some more information on this. For what else you should read today, wrapping up, we have Jimmy Solom. Again, Jimmy is a legend. Same with Crypto Rand. Same with a bunch of these guys on Medium, a bunch of these girls on Medium, influencers, everybody. But again, Jimmy does a really great job of explaining stuff very succinctly to the point. And again, if you're unfamiliar with Bitcoin, if you want to kind of look into the mind of a guy that's been around the space for a couple years now and really has a good idea of the ropes of the industry, definitely take a look at Jimmy's article, and it should be linked in here. Again, I'll link this in the show notes. But again, super helpful, really, really insightful stuff going on from over here. Bulls and bears. The Far East movement. I say this because the Asian markets, specifically Japan and South Korea, really drove a lot of the hype that was happening in the latter half of 2017. We saw the kimchi premium in South Korean markets, where there was a premium of up to 50%, maybe not 50%, but close to 50% for some of these cryptocurrencies, because there was such a demand and there was such a drive and kind of fervor going on in the market. So people were willing to pay these ludicrous prices. Well, it wasn't ludicrous to them, but to us, everybody else in other markets, it did seem kind of wild. And again, human psychology is super interesting. You look at this, and Bitcoin, for people that weren't really involved in the space day to day, there wasn't much attention being driven to Bitcoin in the larger markets and the larger media until it broke 10K, and people were kind of catching up on the bandwagon, trying to put in buy orders at 17K, 18K, 19K, thinking that, oh, it's fine, it's just going to keep on going up, it's going to hit 35K, it's going to hit 40K, I'm going to get rich, I'm going to buy a Lambo, I'm going to retire, I'm going to put all my money into cryptocurrencies. And obviously that wasn't the case. Bitcoin's trading around 7,400 last I checked a couple minutes ago, maybe 7,300, but again, it's It's well below. It's not well below 10K, but it's about 2,500 below 10K, and nobody has an incentive or a rationale to purchase Bitcoin right now. While they did have a huge incentive to, or desire to, when it was over double the current price. So that's, again, just showing that this herd mentality is very much alive and real. But it also shows, like, this is a very great example of why there's so much speculation in the market. If people really believe in Bitcoin, then you should be buying now. If you were willing to buy at 18K, if it would get up to 18K again, and I personally think I will, but again, that's just my opinion, then you're already looking at over a 200% return, potentially up to a 300% return if we get closer to 19-20K. So again, it's really just a perspective and how much you believe in the tech and how much you're willing to risk. And again, if you are going to trade, please don't take out student loans like about 20%. There was an article that came out that said up to 20% of college kids are using their loans to buy crypto. That's stupid, guys. That's really, really dumb. Don't do that. Use some money. Use spending money that you would use for drinks or a movie or anything. I don't know. That Moe's burrito or whatever it is that you're going to use. Maybe put $5. Maybe put $10 into Bitcoin. Buy Litecoin. I don't know. Buy anything. You can buy fractions of these cryptocurrencies. So you don't have to buy one. A lot of people thought you had to buy one Bitcoin, so they decided to buy Litecoin. Which, I mean, if you looked ahead and said a lot of people don't understand fractional ownership, that would have been a great investment. There were a lot of penny, I guess, quote-unquote, penny cryptocurrencies and digital assets towards the middle half of December that people scooped up because they thought they were cheap, which is crazy when you really look at it, because that's not how you should be valuing an investment by any means. But again, it's up to you to look at it fundamentally and say what is going to have future, what's going to have success here and what's going to have a future, and how much upside is there for all these currencies. So again, that's, I don't know, take it or leave it like that. But again, in order for that to happen, we need infrastructure growth. There's a lot of people that got kind of owned going into for the past 3 months or so, where the markets are down probably about 65-70% for Bitcoin at least. The total market cap capped out around 830 million. I think it's around 275 now. So that's a huge slide. And most of the people that lost, or at least sold, I'm personally still holding all my stuff from January. And I really, again, I haven't traded, but there's a lot of people that have sold out. They're just like, I'm out. I can't do this. I'm too stressed out. Probably because they invested too much, and also because they think it's going to slide out to zero. But again, for people that have been around the market, and I'm not even counting myself in this because I've only been around crypto for maybe 9 months now, coming up on 9 months. But again, for people that have been around for years, they understand this is kind of just a boom and bust cycle. We're kind of getting to, I was listening to, I believe, Unchained with Laura Shin, which, by the way, is a great podcast. Laura has a lot of great interviews with influencers in the space and helpful people in the space. But if you kind of look at this historically, then we're kind of entering what could be a growth cycle where underneath there's a lot of infrastructure that's getting built up, and people aren't really looking at the price as much, and that kind of lets companies and projects focus on what actually matters, which is growing these companies and kind of growing these technologies. And we can kind of take a back seat, put our feet up, not have to grab the popcorn and watch these crazy boosts. But by the way, also, just again, as an aside, Grosscoin GRS went up upwards of 100% the other day, which is crazy. I was watching it towards the end of 2017, and I was actually looking at that for a while because GRS went up 1,000%. I think maybe 1 or 2 times, but it shot up 100% just yesterday, maybe 150 from the trough to the peak, and there really wasn't any volume going on there. So who knows? That could have been just driven by. I actually don't know if that was driven by any news. That could have been just a pump by a big player buying into the market where they thought that it was kind of floored out. But if you want to take a look at a coin that just got some activity, some new volume, check out GRS. I'm not suggesting anything from there, but I just noticed that from the coins that I have tracking that I'm watching for altcoins that I just scan occasionally, everything was kind of within the range of 4 to 5% plus or minus, more so plus on the upside yesterday. But GRS was at like 95, 100%, which was insane. Usually that hasn't happened. So again, this could be a sign that maybe altcoins are starting to get some of these cycles again. That's something that I noticed, and again, it would make sense because Jeremy, quote unquote, initiated a bull run, which again, I doubt he did. It's just a matter of when people want to buy into the market. So again, all this that goes on and ties in all this short-term price action. That's all volatility. It doesn't matter. At the end of the day, this market is going to go up 20% if it wants to. It's going to crash back down 15% the next day if people want to sell. It's all about the market mentality, but ultimately, long term, that's going to get pieced together to figure out where we're going in 3 months, and 6 months, and 9 months, in a year. And ultimately, that's going to influence or determine, well, I guess down the road, we'll see how much of that short-term price movement ultimately rolled over and led to actual investment and adoption of these digital assets. So again, in order to do this, there's too many people, I think, that have just gotten burnt in the market in the past 3 months. So in order to make sure that the market can grow healthily, I mean, I'm sure there are a lot of people that did lose out just because they're inexperienced, not willing to hold, or just kind of too stressed out, unfamiliar with the volatility. I think there's probably a good chance that some of those people and investors are going to come back in, but also on top of that, we need more eyeballs on the market. I mean, right now, with the advertisements being banned, which again I think is great because a lot of them were scammy POSs, which so again not great. But again, we need retail investors to adopt these cryptocurrencies and kind of see them in brick and mortar stores. Definitely in brick and mortar stores. There's some integration in these online platforms too, but until we actually have infrastructure built out where people can actually make use of these in the day-to-day, speculative trading isn't going to achieve nearly as much growth as there is with actual use cases. It's just a matter of the market size. I mean, there's only going to be X amount of speculative investors. There's going to be more speculative there's going to be more people that there's more speculative investors and people that want to trade real time and actually use these cryptocurrencies or digital assets. So I mean, again, and then this process out here, add or take some of these words, remove some of these words. Again, eyeballs lead to attention, lead to awareness, curiosity, investment adoption, give or take, whatever. But ultimately, there's a path to people using these digital currencies, and it all starts with attention. So again, looking at the Far East, Asian markets, Japan. This again, credit Joseph Young. He is terrific. He is a cryptocurrency analyst, digital asset analyst, and writer. He's great. Give him a follow on Twitter over here. Again, that'll be, if you want to get, again, he's at I am Joseph Young. If I'm not able to link this in the show notes, I'll try to link these slides again. But again, in Japan, big camera. They're an electronics retailer. There are 41 stores where they've accepted digital asset payments. I think at least Bitcoin. I'm not sure how many specific cryptocurrencies that they might have accepted under their belt. So again, there's three companies in Japan that have really started to adopt cryptocurrencies that are pretty significant, and then the same thing in South Korea. We have these two platforms that have a pretty significant pull in the South Korean economy. Again, we make price. They rolled out, or they're accepting 12 cryptocurrencies. They have a decent revenue. So again, not anything disgusting like in the billions, like we're seeing with some of these other corporations. But it's a start. Just getting eyeballs on this technology, and with Innovation Corp, their travel-based platform, and their 50,000 plus lodging facilities. That can accept these digital currencies. So again, we need more of this in Europe. There's a lot of companies that I believe are moving over to Europe and migrating to Europe to try to bootstrap some of this adoption. We need this in the United States. We need this in Canada. We need this in Mexico. We need this all over the place because ultimately, again, we need eyeballs. It's great that the Asian markets are kind of driving this here, and it makes sense again because there was a lot of hype here. But once these regulations come out in place, I mean, it helps that Japan and South Korea both, or I'd say they're more on the early adopter end of getting these regulations out. So, and I guess the United States is probably still trying to figure out what they're doing. Same with other countries. But again, as these regulations come out, there's going to be a lot more companies that are going to have a better idea of how they're going to be able to integrate cryptocurrencies and digital assets and blockchain into their operations. So after that, hopefully, that'll lead to more investment. Bill Barheit of Abra did an AMA yesterday on Reddit about Litecoin, and he's not really sure when institutional investors are going to enter the market. Ultimately, I mean, they're the only ones that are going to know, but he thinks that definitely once we have more regulation and once we have more adoption, this is really going to start driving some of these larger players into the market. And again, that could be this halo effect where these retail investors say, oh, like this, like company ABC is accepting Bitcoin, like shucks, I might as well start using Bitcoin too. It kind of validates any desire or temptation to use these cryptocurrencies and digital assets. Now, for Centra Tech, they got knocked out. Floyd Mayweather has never been knocked out, so that's one difference between the two. On top of that, Floyd has never been charged with fraud. Centra Tech's co-founders, both of them, they just got charged with fraud by the SEC. They were selling investments. It was their ICO turned out to be a sell of investments. So again, security offering, they did not pitch it and spin it as a security offering. So they are most likely going to jail. One of their founders was trying to leave the country on a flight. He got caught ahead of time, so did not happen. And the other founder was arrested after that as well. But again, Centra Tech, you can look at the chart. They got absolutely battered after this news came out. I'm not sure if you can see that percentage, but that's negative 73% drop within a span of 20 hours. So again, this guys, do your homework. If you were involved or invested in this coin, I mean, that's very, very unfortunate. I'm sorry. I mean, it's a BitConnect 2.0, 3.0, depending on. I mean, there's been so many scams. It's hard to keep track of them. But again, the expectations, everything that they were offering. If you just look in the news and see that there's kind of some uncertainty going on, then that's probably a huge red flag to not be invested in the coin. But again, the expectations, Centra was saying, oh, we're going to have a debit card backed by Visa and MasterCard, which, by the way, both of them, one enough is huge because there's already a big enough struggle to get one of these companies and payment processors on your side. The fact that there was even two was just kind of, like, I don't know, crazy. But again, they were offering a debit card backed by these payment processors. They were offering cream of the crop executives, these great backgrounds, and celebrity backing from the money team, which again, it turns out in reality, there were no ties to Visa or MasterCard. All the executives were fake news. There was an ICO a couple weeks back that had Ryan Gosling's picture as somebody on their team. They just took a Photoshop team and then they make up all the background, call these people professional experts or experts in the field, which again is a bunch of hogwash. But again, that's what these ICOs are doing, and now they're paying the price clearly. The prosecutor for the case too, these guys are in deep. They're in a deep hole. It's the U.S. Attorney's Office of the Southern District in New York. A Redditor on this news. Again, it's an internet guy, so again, take it or leave it. But we looked at the website. I looked at the website, and it checks out. Apparently, these guys have a huge team of lawyers that come from the top law schools. They only take cases that they have overwhelming evidence for, and they're really going against the serious players. So if I were to guess where these co-founders are going, I would say jail. And I would say if you're an ICO guy that's trying to roll out your ICO and you think you can make a run for it, you will not. And you're going to probably go to jail too. So do not do that. Again, not financial advice, not ICO advice, but I mean, this is a great case study. People are going down, and this is awesome for the space because it's going to stop people from losing all their money, as in case in point here. So that's that. And then Binance too. So again, as you can see, it's listed on Binance. May not be listed on Binance anymore because now they're realizing that it's a scam. Binance is going to give everybody 3 days in advance to decide whether or not it's going to be delisted. If there is a delisting, I'm sure that it's going to dump even further. So that, again, Chris Bernisk has brought this up a lot of times in the past, and we're going to get to him in a little bit. But, and I mean, many other people have mentioned this as well. If Binance announces that they're delisting Centra, then it's priced at, I guess, just about 1,400 Satoshis. That could drop to 700 Satoshis, and that's another 50% drop. But overall, it could be, maybe an 80%, 85% drop overall. But I think Chris said something along the lines of, what's the difference between a coin that dropped from 80% to 90%? It's another 50% drop in the price from there. So again, that investment value that you have left in the coin is going to be halved by another 50%. So again, it's not great if you're in Centra right now. If I was in Centra, I would be gone. I would never be in Centra to begin with, but I would definitely take a look in light of this news, and if you're an investor, kind of say, do you think there's going to be a future with this? And Binance will let you know pretty soon if it's going to be listed or not. So again, just stuff to look at in the market when you're kind of going around. The Sharpe Ratio, this is something that it's the most popular risk-adjusted reward ratio that is kind of going on, that's kind of making its way around finance. There's other spin-offs that have been discussed, but personally during my undergrad, I only learned about the Sharpe Ratio. I didn't learn about any of these other methods. But again, when you're looking at returns, if you're looking at the total return alone, you can't just do that. You have to account for volatility, because if you're getting a great return but it's super volatile, there's no guarantee that you're going to get the expected return of your portfolio of that particular financial instrument. You have to account for the standard deviation of the returns in that portfolio or of that asset, and that's where the Sharpe Ratio kind of comes into play. It takes into account the portfolio return, RP, and the idea is here that you would subtract the risk-free rate, which such as a risk-free instrument such as a treasury note. So again, you would get the total return from risk, and you would divide that by the volatility or the risk in the actual instrument. So again, that will give you a number, which is the Sharpe Ratio. The higher the Sharpe Ratio, the more reward per unit of risk you would achieve for that portfolio or that financial instrument. That's the gist of it. Again, this is sourced from John Young. John wrote a pretty stellar Medium article on the Sharpe Ratio and how it applies to digital currencies, Bitcoin Dash, and a couple other. And he also has a downloadable widget that lets you calculate the Sharpe Ratio for other currencies in the market. So if you want to take a look at that, again, it'll be in the slides, and thank you, John, for writing that up. Super helpful. And this is where Chris Bernisk and Adam White come in. Again, so Chris, he was formerly part of ARK Invest. Adam is the head of GDAX right now. Chris is with Placeholder VC. But they wrote up a research paper called Ringing the Bell for a New Asset Class. I have read Crypto Assets by Chris Bernisk, and again, I am blanking on his co-author, so apologies about that, but it's a tremendous book. I really recommend it to anybody that's trying to get a better idea about the economic structure of crypto assets, and kind of the idea about why cryptocurrencies and digital currencies, or crypto assets, again, as Chris calls them and refers to them, and many other people do as well, why they should be their own asset class. And within that book and within their paper, both of them talk about the Sharpe Ratio and how it applies to cryptocurrencies and digital currencies. And again, this is just a quick overview. If you want to take another look, the source is down here. You can take a look at the actual paper. I really recommend it. I think it's phenomenal. But when they looked at the Sharpe Ratio for Bitcoin compared to U.S. equities, U.S. bonds, gold, U.S. real estate, oil, and emerging markets, and over 1 year, 1, 2, 3, 4, 5 years, and again, if you look at the Sharpe Ratio that they calculated, Bitcoin outperformed every single other asset class other than one period in the last 3 years, which was during the 2014 bear market. So other than that, Bitcoin achieved greater returns for every unit of risk than all these other financial instruments. And yeah, there were 80%, 90% swings in value over the course of several days. During the infancy of Bitcoin, and there's definitely a lot of volatility right now, but we're not seeing nearly as much volatility with Bitcoin as there was during the early days. There's still these 20% swings, not even as much as there used to be in the I guess in the latter half or towards the rear end of 2017. We're still definitely seeing 5% swings, not as much 10% swings, I guess, in recent days, but that still can definitely happen. But again, the reward that you're getting even within the past year, that was the highest. The past year was the highest. Was where we saw the highest Sharpe ratio for Bitcoin. And again, they're still outperforming all of these assets. So again, whether or not you want to have a high Sharpe ratio in your portfolio, or as for a financial instrument in your portfolio, some people may not like to have a high Sharpe ratio because there could be, I don't know, it's really a preference. But again, this shows that Chris and Adam are really trying to explain here and show that Bitcoin provides advantages when it's incorporated into a portfolio. And going into crypto assets a little bit, I'll just touch on this. I don't want to kind of get my facts incorrect, but if you add Bitcoin and digital assets, well, Bitcoin because it's only focused on Bitcoin, but if you add Bitcoin into a portfolio, you're able to achieve less risk and higher returns with portfolios that contain Bitcoin versus those that do not contain Bitcoin. So again, this is the argument that Chris and Adam are trying to make, that a lot of asset managers and hedge fund managers, and also just mom and pop retail investors, should really start looking at Bitcoin as a unique asset class that has distinct characteristics from every single one of these other markets out there that have been around for a substantial period of time, and start thinking about potentially allocating 1%, 2%, maybe 3% of your entire portfolio to digital assets in order to help increase your Sharpe ratio overall and potentially see some of these higher returns. So again, that's that. It's super helpful again if you guys want to take a look at this. But yeah, just another great input from two really prominent figures and influencers in the space. So again, that's it. Thank you guys for tuning in. I'll be back here tomorrow with our next overview. We're going to be Daily Bits 77 tomorrow. And that's really it. If you guys want to subscribe, if you want to share this with our friends, I really appreciate any likes, any shares on our YouTube channel. I feel like there's definitely a desire or a demand for this kind of content, but you know, we're still really working on trying to grow out our channel. So if you guys could just do the quick effort of, or just do a quick task of, I don't know, sending it over to a buddy that might want to hear about this insight. I mean, I know these videos are pretty long, but if there's value here, and I think there is value here by actually sitting down and walking through this news, and again, just trying to help educate people day to day. I'm trying to help other people understand where I'm coming from, how I'm learning in this market. So anything that I can do that's going to be valuable, I'm going to try to make that happen. And again, we're pushing out other content onto our social media platforms as well. So if you want to take there and kind of ride along and see what we're doing, by all means, shoot us a follow, interact with us. We're going to get back to you as often as possible. So, I mean, that's really it, guys. Thank you so much again for tuning in, and we'll see you back tomorrow. All right, cheers. Bye.